Hello everyone, welcome back to the XForceGlobal channel. Today we're diving right back into Bitcoin's price action on the medium and shorter time frames here. In the previous video, we discussed on how the bull market bubble could end for Bitcoin on the macro, but in this video, we're going to try and further narrow down the scenarios and ideas. And I do have some updated ideas to help supplement our previous macro analysis. But again, just a quick friendly reminder to please make sure to hit that like button and also subscribe to the channel if you haven't already. Your support means everything to me. Thank you very much. Now, starting off with our first primary scenario that we have here is that we have been talking about this idea for the past few weeks, but Bitcoin is still possibly working in what could possibly be working for one more move to the upside for a larger macro fifth wave. We didn't invalidate anything just yet, but it is getting increasingly difficult as any wave 1, 2 of any degree is difficult to count since it is the starting wave of any degree. And right now, the only way I can see it is a possible double zigzag or a WXY double zigzag that has multiple zigzags, two ABCs, that is, one for wave W and then one for wave Y. And the X wave is the connector wave. Now, it is getting increasingly difficult as any wave 1, 2 of any degree, like I said, is difficult to count since it is the starting wave. But I really took the time to dive into it, and I think that the only wave 1, 2 could be counted as a possible double zigzag. But just very quickly, the whole premise of this first scenario is working within the basic 5-wave Elliott wave structure of the larger fifth wave, as that is the missing leg that we have for this larger overall macro structure, that we are still possibly missing one more leg to the upside. So we really need to move now. Otherwise, my bias will have to shift as I must remain neutral and abide to higher probable scenarios if we dump without any controlled pullbacks. And it's looking increasingly impulsive to the downside right now, and that's why I do have some alternative scenarios that I think that could entice you. But again, we'll discuss the shorter timeframes and how we can actually construct this WXY after I share all of the scenarios. So this is the first scenario. There really isn't much to add. We've been talking about this for quite a while. It's still working on the basis of a major invalidation until this wave 2 is invalidated. So it will remain my highest probable scenario until proven otherwise. And if it breaks, I hope everyone has their application ready for becoming a fry cook at the Krusty Krab, because it's not going to look pretty. So let's dive right into the second scenario. We also discussed this second scenario in the previous video, which is the ending diagonal scenario. Again, a bit too early to call for, but if played out, can still give the us the general direction to the upside, but with a delayed response along the way as corrective waves. Now, these corrective waves or corrective zigzags, either as an ABC or a WXY, will be the ultimate balance between the bulls and the bears. But more importantly, it is a terminal Elliott wave pattern that signals a major exhaustion within the trend. So we will be reaching higher levels, but we probably won't be reaching those extension levels that we've been talking about for this wave 5 of a normal 5-wave structure to the upside. Again, it is one of my favorite patterns to actually trade personally, once it's identified, that is. But the reason why this idea is still a working idea is because we just simply do not have enough information. Until we get a true loss of momentum of buyers and sellers, we won't be able to put this idea at the top of the list. You can think of this idea as an artificial extension, basically, and the final push that creates a narrowing wedge-like structure that results in an unsustainable push that eventually collapses when buying dries up, basically. So the pattern is a 3-3-3-3-3, where the threes represent a 3-wave ABC or WXY pattern, and it represents, again, a last-ditch capitulation type move before a strong reversal and market shock, basically, that terminates at usually wave 5s or Cs, and in this case, it's the 5th wave, as that is the missing leg. It catches a lot of traders off guard, ladies and gentlemen, but as Elliott Wave analysts, the pattern has been observed enough to become a discernible pattern, and from personal experience, it's one of the most observed patterns in the markets as a sign of reversal, or a major reversal, that is. And right now, a lot of people are scared, and that is usually the first sign that we are going to be moving correctively to the upside when it comes to the fundamental side of things, and we start to lose a lot of momentum, and we start seeing divergences being created as the diagonal starts to complete. So the key takeaway to this idea is that once it actually solidifies as a pattern, most preferably once this wave 4 is in, then the diagonal is going to be assumed, at least very high probable scenario if it does continue as 3 waves, that we're going to be working for one more last 5th wave, and that will be the end of all things. So this will almost be a telltale sign of an imminent trend reversal and will reflect the final stage of that emotional and exhaustive move where the market participants like you will be stretched to the limits, indicating a massive reversal for those who are seeing it from an Elliott Wave perspective. But overall, I am just keeping this on the radar. It's not a main scenario. It's just an alternative scenario because it does still pertain a pretty good look if this were to play out. So now we're going to be moving into the third scenario, which is now becoming a possible primary scenario very soon if this turns ugly, ladies and gentlemen. Why? Because we can technically say that the 5th wave has ended. Now, this is going to be a complete 180 degree from our last video where we were possibly looking for higher levels, but I did take the time to possibly count what if, just a big what if, that this is the end of all things. Like I said, this could be possibly a distribution for a wave 2 here, as we also saw a distribution level being created here for the wave 4. So it's not going to be the best looking. Distributions are usually not the best looking after all, especially when it comes to WXYs and possibly sideways corrective structures. But this can be a possible running flat for a wave 2. And if it does move down impulsively, which looks like it's trying to do so, and we might have a possible window of opportunity to break this previous low, and that will be our definite impulsive move to the downside, where this may be working for a wave 1, 2, 3, 4, 5 of this extension of a possible intermediate degree wave 3. So if this is the case and we break this level, I think it's toast. I don't see this being a larger distribution pattern anymore, meaning that I don't see this as a larger flat pattern, even though how good it may look. I'm not seeing this level being impulsive in nature as a possible move as a wave C to the downside. This has to be the beginning of something, as it is a distribution. So the way that I have it counted right now is that we're going to see this as a wave 1, 2. Nothing has changed there. This is going into a leading diagonal wave 1, 2, and then 3, 4, 5 that has now completed, instead of having these as nested 1, 2 structures. So as you have seen from the first scenario, where we have a series of 1, 2s, where we're now working in possibly the final larger wave 3, 4 completion, we possibly, ladies and gentlemen, could have completed this whole trend, as we did create a technical high here, and we can still say that with confidence that this is a completed Elliott wave structure with a relatively pretty nice look, right? Where this is the extension of this wave 3 rather. So again, a leading diagonal, short wave 2, I mean, it's not the best, but again, as with any leading diagonal, especially with overlaps, theoretically, it will put us into an extended wave 3 with no real strong pullbacks, very shallow pullbacks, and that's one of the characteristics of this extension here that it can also be fitted into. And then we have a sideways wave 4, which is also alternatively working in alternation with this wave 1, 2, and then we have the possibility of completing this wave 5 as the wave 3 here. Nothing has changed here, 4, and now instead of working for a 5-wave move up, we're now placing this 5th wave here, which is now completed as the possible top. So how do we figure this out? Now, before we go into the shorter time frame of this, let's go back to our primary scenario, since we didn't invalidate this level just yet. So how can we create this larger wave 1, 2, where we're still working above this major invalidation level, as we are now about to reach the 61.8% or that major important Fibonacci level? So if we zoom into the shorter time frames and we're trying to figure out how this WXY is being created, I would say, man, this is really, really difficult, ladies and gentlemen, but the only way I can count this seems like is a possible 1, 2, 3, and then we have a flat here for a wave 4, and then we have some kind or possibly even a triangle, and we could be working as an ABC going into wave 1, 2, 3, 4, and 5 as a very ugly expanded diagonal. I mean, there's just so many overlaps here, ladies and gentlemen. I just simply cannot figure out how to count this due to this so many overlaps. That's why that ultimate bear market scenario comes into play. But again, wave 5s usually do extend in, commodity markets, especially when there's times of uncertainties or times of extreme FOMO. But right now, it just seems like a lot of, I don't know what's going on, if there's any news going on, but it seems like a lot of people are scared here. So I would say that this is going to be the first leg going into that wave A. technically we should be working for a wave B at this point. If we're going to still retain to this possible wave Y as an ABC, we are then going to be looking for this B wave to come up and at least retest that median line. I mean, ideally we would wanted to have a B wave above that median line and then break below it and then come down and retest the bottom level. But we are already so close to the bottom of this channel. But it doesn't have to. I mean, we can have long wave A's and short wave C's. It's also part of the nature of how crypto market works. We've seen those a lot. But right now it does look impulsive to the downside, and this is really the only way I can see a conclusive actionary wave going to the downside. So are we finding any divergences at least? Are we seeing any divergences? It seems like there is a divergence being built here. Maybe we can fit in a contracting diagonal here, but there's just simply not enough information at the current time of recording. I would say that if this is a triangle, then this is going to be that 1, 2, 3, 4, 5 going into that wave A as the final fifth wave. That is how we're going to look at it, ladies and gentlemen. There's just simply no way, especially with so many market inefficiencies on this shorter time frame. But the overall structure, like I said, as long as we're focusing on the macro of this red line here and we stay above it, we're still within a very important zone of support. So there's no need to panic in that sense, meaning that the 61.8% is probably where a lot of people who are not even versed in the Elliott Wave Theory see as an important level. And then that 78.6% is that next square root function of the previous one over here, and that is going to be our next level of support, which should give us a pretty relatively good 1-to-1 extension, meaning that wave W and wave Y will equal in length as kind of the minimum expectation. So we really want to see this ABC bounce here, ladies and gentlemen. We really, really want to see it. Otherwise, this is going to be turning into wave 1 or a wave 2 of some sort. So that's the first scenario on the shorter time frame. And then the second idea, the ending diagonal, same idea, is basically just working in a series of threes. We're just labeling this as an ABC, this same idea as the WXY going into wave 2. Ideally, we want to be supported at that 61.8 between the 78.6% zone, and that should be our wave 2. But again, we don't know until we actually have that fourth subway and also possibly going to the territory of wave 1. So we just don't have enough information there. Now, the most interesting scenario to me is possibly the ultimate bear market scenario, ladies and gentlemen. We're just going to have to work with market inefficiencies of this distribution range as we did over here. Now, the distribution range here is going to be labeled as a possible wave 1, 2, and this whole range here is now going to be an ABC running flat idea. Now, let's see if we do have any expectations met in terms of the normal Fibonacci retracements of with this B wave. Did it reach that pocket, the zone of that 1, 2, 3, 6, 1, 3, 8, 2? Perfectly, right? So there is a lot of merit to this scenario, ladies and gentlemen, where this could now turn into a WXY. This range here is now fitted nicely as an ABC. This range here is now fitted as an ABC going into that wave X. So again, there's a little bit of merit going on here for this possible extreme bearish scenario. So it's very possible if we can continue to the downside with no real pausing. So if this is a wave 1, 2, how is this going to be fitted into the larger structure? Well, this is the only way. We're going to have to see this as a 1, 2, and we're now working for an extended wave 3 where we're not going to have as strong of a pullback. So we're going to have shallow pullbacks. Maybe that 1, 2 will come into play. We won't even get a real high retracement, come down 3, 4, 5, and then boom, we're going to be in that wave 4 of a higher degree, stall, going for that fifth wave. That should eventually possibly create an Elliott Wave channel in that sense. So I think that's possibly one of the scenarios here, ladies and gentlemen. It's increasing in probability at this current state. It's just simply the only way we can look at it. It's either you're extremely bullish at these levels here, or you're starting to see this as the beginning of something. And remember, you have to organize your scenarios as either the beginning of something, which is a wave 1, 2, or this is a corrective structure, which is the end of something here. So that is how you work with the hybrids of these actionary and corrective and reactive waves, right? So that is the way we're going to be looking at it, ladies and gentlemen. Again, the fib retracement, that B pocket zone over here, possibly could be working in what could be the B pocket zone as a possible running flat as wave 1, 2 right here. So keep that in mind, and that is how we're going to look at it. And again, how that's going to be fitted into the larger time frame where this wave 5 is now completely completed is that this is now, if this turns into an impulsive wave when we break below this red line, this is going to be turning us into that first wave 1 or wave A, see a retraceable move here as a wave B or a wave 2. And if this moves down, this could be that C wave, depending on if this is going to be supported or not. And if it turns into a wave 3 and it breaks below that C wave, this is just going to be another larger picture part of a bear market, ladies and gentlemen. 4, 5, and this right here is gonna be that part of a larger A, and then B, C. That's how we're looking at it, and that's gonna be the bear market, right? Basically. So is that turning into a bear market? Who knows? We'll have to see. We'll just have to see how far this wave 3 extends. Basically, we don't want to be going that deep, right? We really ideally want to see some kind of symmetry going on, right? So this could be the wave A, this could be B, 3, 4, 5, this could be the wave C, and that, ladies and gentlemen, could be the ultimate bear market that we can be looking for, a larger wave 1 that completed, and that 2, just like we have been discussing in every single scenario prior to this video as well. So we're just looking for eventually a bear market, ladies and gentlemen. I mean, I'm basically a bear on the larger macro time frames, but at the same time, we are still sticking to the overall idea that we could be working for one more move to the upside. But until then, and we break these levels here, still sticking with that first scenario where this wave 4 is complete. We work for a wave 2, possibly as a WXY, work for one more move to the upside. And in fact, I don't even think that's going to be extending anymore. I think we're going to even lower the targets here. Have a wave 3 here, maybe go into that 161.8 target, as that is possibly going to be even shorter. 3, 4, and then 5, I would say is going to end around even possibly these levels over here. We're going to find definitely some momentum divergence being created since the overall move of this move here, and also the larger time frame that we saw from 15K all the way up to here, to finally eventually conclude of a fifth of a larger fifth. So hopefully that was helpful, ladies and gentlemen. Make sure I'll be putting some timestamps on here maybe to kind of organize it as best as I can. We have 3 scenarios here. The first scenario is that larger wave 4 right here, as we have here. And then the second idea is that ending diagonal, which is still way too early to call for. So that puts us into 2 main scenarios, which is either this wave 5 is now complete and we're working to the downside now, or we're going to be working for one more move to the upside. But for me, if I had to choose and you had a gun pointed to my head right now, I would definitely choose this idea here, since the major invalidation is still being protected and we're still in that golden Fibonacci zone. Arguably, we haven't even retested that just yet, and I think we're going to be working for one more move to the upside. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.